On any given day, week, or month, the markets make available vast amounts of money to anyone who has the capacity to put on a trade. Since the markets are in constant motion, this money is also constantly flowing, which makes the possibilities for success greatly magnified and seemingly within your grasp. Everyone who comes into the crypto market ends up learning something about it. However, every few very few people even learn the attitudes that are absolutely essential to becoming a consistent winner. On this episode of Crypto Talk Tuesday, you see how excited I am to talk about this. I'm all getting all choked up, but we're going to discuss the different types of people who enter the crypto market and the types of techniques used in hopes of becoming the next crypto millionaire. Let's get scholarly. Welcome to another episode of Crypto Talk Tuesday. I'm your host, Mario Johnson, president of Crypto Scholars LLC. And like I said, if you guys didn't catch the intro, I'm pretty choked up because I'm really excited about talking about this particular topic regarding managing your emotions, understanding how important your emotions play when you're involved in any market overall, but the one market in particular is the cryptocurrency market. Because if you guys haven't learned, it is extremely volatile. And the one thing about volatility goes up, but it also goes down. So I wanted to really kind of go over some of the mental aspects. First of all, I wanted to cover the different types of people that enter into the space. And I really want to, just kind of let you know from my perspective what it takes mentally to truthfully be successful. And this particular type of characteristic makes you successful, not just in, the crypto space, but it makes you successful overall. It generally makes you a better person. Being able to remain in control, remaining to understand, what your cues are that will trigger an emotional reaction, being able to identify them and being able to, again, remain in control of them in a way that it's not going to cause you to make a drastic decision, irrational or ill-informed decision, that could lead to not so good things as a result of those decisions. So, as always, which I'm gonna get it pulled up here because I almost forgot. You guys almost had me. I did almost forget. But what I want to do is make sure we give our disclaimer because we don't want to have any legal issues. So I got that pulled up here. So let's get that on out the way. The information contained herein is for informational and or educational purposes only. Nothing shall be construed to be financial, legal, or tax advice. The content of this video is solely the opinions of myself, who is not a licensed financial advisor or registered investment advisor. Remember, guys, as I always say in every video, and I'm going to always continue to say this, trading cryptocurrencies possess a considerable risk of loss. Myself, nor Crypto Scholars LLC offer any guarantee of any particular outcome. So now that we got that out the way, let's go ahead and dig into this. So the things I want to talk about, like I said, to get started, is the types of people who enter into this space. Now, there's multiple types of people overall. I don't want to categorize everybody, but for the sake of this conversation, I'm going to break people down into four general types who primarily enter into this space. The first of which I'll talk about, is an investor. Now, I consider myself to be more of an investor, mainly because of the fact that I'm in it for the long term. But it's more like a hybrid type investor because in addition to my investing account, which is, my crypto that I'm definitely going to hold for years and don't plan to sell, the crypto that at worst I will leverage for any particular cash that I need. We've gone over this in a few other videos, talking about how to leverage your crypto assets in the way of taking loans to help with, taxes and things like that. So I am primarily an investor. However, I am learning how to become a trader, which is a second uh, type of person who comes into the crypto space. Stock market as well. The common type of trader generally are in the stock market and in the foreign exchange, forex markets. Crypto has definitely started to see a lot of those traders migrate over because of because of how new it is in regards to it being out, um, and in comparison to the different other types of markets, and because of the amazing potential for upside. Again, we're going to talk about that volatility, but volatility is a good thing for those who can stomach it. And then from there, another type of person who enters the space is a speculator. Now, speculators are interesting. Um, and I'm going to give you guys actual definitions and examples of each one, but I just kind of want to give you a quick overview. Now, speculators, they're interesting because of the fact that they have some type of risk plan. They have some type of plan, but what they're getting into, what they're choosing to put their money into, is more of a kind of like a hype play. It's not necessarily. It doesn't necessarily. The project uh, isn't necessarily taken off yet. It doesn't have a solid roadmap, things like that. So those are your speculators. And then finally, we have your gamblers. I enjoy talking about gamblers, but let's roll over to the investor. And I want to use Investopedia as a reference here for speaking about an investor in regards to definition. So, as Investopedia says, it's my mouth. It's got a hair. Interesting. Sorry, guys. Totally got my ADD. What do you call it? Squirrel movie kicked in. Had a hair in my mouth, as you guys know. I have a beard, so I generally get to eat hair more times than not. And it just caught me off guard because it was really messing with my tongue. And I'm already having an issue speaking anyway. And you got a hair coming in and causing problems. Anyway, so going back to it, um, what is an investor? Well, an investor is any person or other entity, such as a firm or mutual fund, who commits capital with the expectation of receiving financial returns. Investors rely on different financial instruments to earn a rate of return and accomplish important financial objectives like building retirement savings, funding a college education, or merely accumulating additional wealth over time. Keyword there, in addition to everything else that was said here, this is a really good definition, but those last two words, over time, very important when you're thinking about investing. It's not a quick flip. You're investing with a minimum 5, 10, 20 year outlook in regards to how you plan on getting a return off the money you're putting into whatever it is you're putting into it. So, that's why I say like to consider myself as a investor, because of the fact that, I'm putting money into my different assets with the intent of, 10 years from now, never having to work again. 10 years from now, they're producing enough cash flow to where I can retire happily, travel, do all the things that, I plan to do and look forward to doing, especially once I get married. All those things are definitely on my personal roadmap. They are personal goals of mine. So, as I was telling you guys, I have an investment account, that I dedicate a certain amount of money to on a scheduled basis. Um, that I have again, 5, 10, 20 year, um, what do you call that, perspective? No, outlook for returns. So that was the investor definition I wanted to make you guys aware of. And one thing I want you guys to think about before I switch over to trader, is that when you consider yourself an investor, you're not concerned about what the price is doing every hour. for the most part, unless it's, literally crashing and appears to be going to zero. But even then, when they say Amazon went from 90 something dollars all the way down to $6, and we know where Amazon is today. So, needless to say is you're not concerned with what the immediate price action is, because of the fact that, as an investor, we talked about in previous videos, doing your due diligence, doing the research, understanding exactly what it is you're putting your money into, and having a very strong conviction about that particular project. You know, Nothing's 100%, but understanding that the probability of that particular project being successful long term and producing the returns in which you're projecting it to produce long term, um, is very high, and having that extreme conviction is a, a something that you should definitely pay great attention to, and have, um, I want to say, the utmost confidence in regards to, for one, putting your money into it, but, in addition to that, understanding that, like I said, 5, 10, 20 years from now, that price is going to produce the return that you're wanting to produce. My apologies, guys. My brother and my niece just walked in, so it's completely threw my train of thought off again. Another squirrel moment. They have no respect for the fact that I'm live right now, but whatever. I'll put them on blast later. So again, understanding, what it takes, mentally, where to have yourself at in regards of claiming the role as being an investor is very important, extremely important. Like I said, because of the fact that you're looking not at the immediate price action, you're looking at like they always say, when in doubt, zoom out. You're looking at it from a pure macro point of view, understanding that, I use Bitcoin for an example. Despite the fact that Bitcoin is extremely volatile, year to year, it has averaged, right at a 200% return. So, understanding that and being able to use that data to project out, the years, in the years to come, you know, it's huge. And again, you have to forgive me, 20 thoughts at one time, but, not to harp on that too much. Just understand, guys, that if you want to get into anything as a investor, they say set it and forget it. You know, um, Treat it like I treat my crypto investments like my retirement plan. I treat it the same way you would treat your 401k, your Roth, you know, things of that nature, because I'm not looking at it to produce, I'm not looking at it to put me in a financially secure, financially stable, position to where I have a lot of options tomorrow. I'm looking at that particular, investment account as it's going to give me everything that I'm hoping to achieve 5, 10, 20 years from now. It's going to be very consistent. So that's the role of an investor. And I want you guys to really, 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 focus on and pay attention to the mindset that it requires to have an investor. We're going to circle back to this, here shortly. Now, next thing I want to talk about is I'm going to give a definition on is a trader. So let's talk about traders. Now, according again, I'm going to use Investopedia as a reference here, but, Investopedia says, what is a trader? A trader is an individual who engages in the buying and selling of financial assets in any financial market, either for himself or on behalf of another person or institution. The main difference between a trader and an investor is the duration for which the person holds the asset. Investors tend to have a long-term time horizon, while traders tend to hold assets for shorter periods of time to capitalize on short-term trends. So that kind of, goes back to what I mentioned in regards to having the investor's mindset. Now, with traders, you have different types of traders. You have your day traders, also known as scalp traders, and then you have your swing traders who, tend to trade more on the hourly and above, time frames. They can get into a trade, hold that trade, for a few days, even a few weeks, potentially a month or two, waiting on that one swing, that great opportunity for it to either move up or move down, depending on, the direction in which the market is going at that time. You can truly capitalize on some really good profits. But the thing about a trader is, and this is where you gotta truly understand, trading. When they say trading is not for everybody, trading is truly not for everybody, because of the fact that, and I'm kind of getting a little early into what I want to talk about later in regards to having the mentality to be, the mentality to stomach, the cojones, to truly be able to understand this market, to survive in an extremely volatile market. You know, to be a trader, you literally gotta be divulge of most emotions. You have to be very in tune with yourself. You really need to know, um, like I was talking about before, what your triggers are. What's going to cause you to act irrationally, and be able to, keep that under control at all times. Because traders, unlike investors, they are paying attention to, the price on a, hell, all the way down to a minute, if not more, not less, rather, time frame. You got the 1 minute, the 5 minute, the some people use the 15, getting up into, those are your scalpers, referencing the hourly and the daily. Your swing guys would utilize the 4 hour, um, hell, sometimes a 12 hour, definitely the daily, and they'll reference the weekly also, to try to get, you know, um, good, to try to identify good entry points. And if you're not in the correct mindset to understand, or shall I say, if you don't have the correct mindset to accept what's in front of you versus hoping for what could happen, that you're going to be in a real bad place. You're going to find yourself losing more than you're winning. A lot of people say that those skills come with time, but you know, being able to read charts is one thing, which is a great thing. It's a great skill to have. Technical analysis, TA is what they call it. Being able to identify patterns, on charts. I'm gonna show you guys a Bitcoin chart here as an example shortly, but that's a great thing. But having the control, having the ability to trust yourself, trust your knowledge, to get into a trade, and trust that when you get out of a trade, you're not worried about anything else related to that trade. If it's a winning trade, you're taking your percentage gains and you're moving on to the next trade, versus, thinking back, watching, looking at the future, dwelling on what could have been. You know, man, I could have made, 100x versus the 20x that you made. Why dwell on it? I love the fact that you pulled the winning trade, you made 20x, gain. Most people aren't even doing that. And that's a huge number. I'm giving an extreme example, but it's still an example. You know, having the mental capacity, the mental and emotional control to be able to trust yourself enough to be confident. That's the word I'm looking for. Having the confidence to enter a trade. Because we can all say, what they call it, paper trading. We can all paper trade and just go in there gunslinging, trying to perfect your strategies and things like that. Again, those are great. But if you're not perfecting your mental state, understanding, what caused that endorphin rush, you know, um, what caused that stress, in looking at that trade, you know, being able to truly identify those things, and putting the I would say, putting the tools in place mentally to keep those at bay, to remain calm at all times. My girlfriend, sometimes it's a good thing, sometimes not a good thing, but I'm like this all the time. I laugh, I joke, I play, but the sky, 9.5 times out of 10, the sky's never falling, because of the fact that when something does happen, I'm immediately thinking of a way a solution for it. like I said, 9.5 times out of 10, I'm human. So I'm not perfect. It's not always that way. There are certain things that will trigger me, very rare events to where I've come out of character, but I still have come out of character. So, you know, um, again, being able to identify that personality type and being able to put yourself in that mindset is going to really help you in your quest to become a successful trader. So, not to spend too much time on traders, let's talk about speculators and gamblers. Those are my favorites. Not to be, but to watch, because they're what makes, for one, they make social media fun. But they also, you know, they kind of help with confirming whether or not you, outside of your wins and losses, your success rate, they kind of help confirm if you're headed down the right path. Because when you're watching people freaking out, you're watching people just throwing money at any old tip that they heard somebody say, to the moon, to the moon. People say that a lot when the market's going up, not realizing that they've gotten sucked in. The market maker has you now. You play right into the market maker's trap, and he's literally baiting you in all of your money into the market to do exactly what Bitcoin did here lately, which is do a complete 180 and have a major correction. You know, so let's talk about the definition of a speculator and a gambler. So again, using Investopedia as a reference, speculation and gambling are two different actions used to increase wealth under conditions of risk and uncertainty. However, these two terms are very different in the world of investing. Gambling refers to wagering money in an event that has an uncertain outcome in hopes of winning more money, whereas speculation involves taking a calculated risk in an uncertain outcome. Speculation involves some sort of positive expected return on investment, even though the end result may very well be a loss, while the expected return for gambling is negative for the player. You know how they say the house always wins? This is what they mean. Even though some people, keyword there, some people may get lucky and win. Now, I'll move down one more time. Speculation involves calculating risk and conducting research before entering a financial transaction. A speculator buys or sells assets in hopes of having a bigger potential gain than the amount he or she risks. A speculator takes risk and knows that the more risk they assume, in theory, the higher their potential gain. However, they also know they may lose more than their potential gain. Now, let's talk about that for a second. And let's give some examples of exactly what could classify a person as a speculator. Okay, so when I first got into the crypto space, I was very, I was very, I wouldn't say green. I was a newbie. That's the best way to describe myself, as a newbie. I had no idea what cryptocurrency assets were. As most of us, you don't know something until you go out and learn it, and then you're more familiar with it, because we never know everything there is to know about everything. So when I first got into the crypto space, I heard about Bitcoin because, of course, for most people back then, the gateway into cryptocurrency was through Bitcoin. And um, it was presented to me by Mark Roberts, a billionaire investor, very smart man, very brilliant man, at one of the at a event that he and I were asked to speak at. And I feel very honored at this point. I had no idea who he was, to be honest with you, but very, very honored now to know that I was actually able to share a podium with this caliber person. But anyway, so in his speech, he actually made a reference to an upcoming technology that people should definitely start looking into. But he said cryptocurrency, um, Bitcoin in particular. And I think that's when the light bulb went off in his head, or he realized he wasn't talking to a group of his peers. He was talking to some random people, and he completely got back on script in regards to his speech. But I took away from that because I was like, okay, this is one of those moments where, they're giving inside information. So of course I sound nasally, guys. I'm coming over, and I hate giving excuses as to why certain things are happening, but I'm recovering from, I don't know what the hell it was. I think it was I'd say it was the flu. It started on Saturday. I was given I was asked to be a speaker for an event for Juneteenth, and by the end of the day, Saturday, it had knocked me on my ass. I'm talking about neck was hurting, back was tight, all my muscles were sore, very congested, everything was messed up. And Sunday, it's like it called his brother in and they jumped me. As a guy got jumped on Sunday. Started feeling a little bit better yesterday. And today, I'm in the drainage phase. So my body fought back. Thank God for a really healthy immune system. It fought back yesterday. And now it's cleaning up the trash, I guess you could say. So everything's kind of draining out. So um, my nose right now is really clogged. So I probably sound nasally, sound like I'm, more nasally than normal. So I just kind of want to let you guys know that's the reason why I may sound the way that I do. You may hear me sniffle a few times. Again, thank God my immune system decided to call, its brother and cousin and fight back. Because when I tell you they jumped me on Sunday, I didn't leave the bed Saturday night, Sunday, and most of yesterday, confined to the bed. So again, the body's kind of taking out the trash right now, cleaning up the mess from the fight. So anyway, going back to what I was saying. So I would be considered at that time as a speculator because I was getting into something I had very little knowledge on. Uh, as I began to research it more and more, I started to improve my knowledge, but there was still a risk involved. Um, Somewhat calculated. I was still learning how to do risk analysis in the realm of um, getting into the markets. So I hadn't truly, understood the risk to reward ratio. I didn't understand the asymmetry involved, but I would definitely consider myself to have been a speculator at that time because I was getting into something that I was starting to gain knowledge on with the hopes. There's that word again. Generating a return, not necessarily having enough information to feel as comfortable as I should have at that time. So, needless to say, I started my little account with Coinbase, and I saw the price of Bitcoin, and I did what everybody else did. I saw the price of Bitcoin and was like, "What the hell? I can't afford this." You know, not realizing that again because of my limited knowledge that Bitcoin was divisible up to the 8 decimal place, and I could have bought satoshis. I could have started way back then. Investing into Bitcoin on a scheduled dollar cost average again on a scheduled time frame, and I saw it. I was like, nope. The other two assets at the time on Coinbase was Ethereum and Litecoin. Litecoin was the cheapest. So you know what I did? I bought $100 worth of Litecoin. Excuse me. And that was the gist of it for me. It's kind of one of those set it and forget it things. And no idea what I was getting myself into. Didn't understand about blockchain technology at all. Again, was just learning about it. So I set it and forget it. Again, perfect example of me being a speculator. Now, people who are getting into the market right now, um, or have been back when I would say back at the beginning of this year, back in the Dogecoin roll, the Dogecoin blow up, Bitcoin definitely went to new all-time highs. I think it went from 20,000 to 64,000 within a very short amount of time. I think Dogecoin was the biggest winner of that little period there. But people were jumping into the market with no understanding of exactly what they were doing, had did absolutely no research. They heard a tip, for somebody, and they were told that you know it started here, it's here, and it's going to continue to go, to the moon. That's where that whole to the moon thing came from. And one thing that I was always saying is that, and I actually made a post about it once I'm able to pull it up. 'Cause I want to show you guys the quote. It's a very good quote that I had posted here. Let me bring this up real quick. I'll switch it over for you. Here, a gambler will tell you how much money you can win, but a trader will tell you how much you can lose. Understand which you are and act accordingly. Now, I made that post a couple of days ago, June 20th. In addition to my post here, that was kind of funny. I ain't gonna lie, but that's kind of what the market's doing to everybody right now. But you gotta have those brass cojones. You gotta have those steel ones to be able to stomach it. But anyway, had another one of squirrel moments. But what I was getting at with that example is that a lot of people got into the market as gamblers. They didn't come in as speculators because they didn't understand the risk. They didn't understand the downside. They didn't understand volatility. All they knew was it's going up. It's going to continue to go up, you know. And they were willing to throw a ton of money at it because someone that they knew made a couple of dollars. Somebody may have made a couple of $100, but the problem is, and that's what we talked about with the definition going back to here of a gambler. you know, Even though some people may get lucky and win. So you're going to risk, you know, your hard earned money off of no information other than this person made a lot of money, you know. Um, Now, I understand this is where FOMO comes into play, fear of missing out. And this is where what I talked about, that endorphin rush, because now all of a sudden you have that immediate thought of how much money you can make, because now you're comparing it to this person. You don't understand that this person, they were gambling, but they probably speculated and got into it very early when the price was. We'll use Dogecoin for an example. I haven't picked on Dogecoin in quite a while, so I use Dogecoin as an example. The people who got in Dogecoin when it was less than a penny were loving life if they held when it went up to 74 cents. And I tell you, they were loving life. If you put in $1,000 into Dogecoin when it was fractions of a penny, you made out real good. But the question is, when Dogecoin was fractions of a penny, people didn't care about it. People didn't understand what it was. They didn't really know about it. It was trending on TikTok for a while back last summer, but it didn't really take off. Like, the people who were putting into it or trying to promote it at that time were hoping that it would take off. So you're looking at having to put something in, put money into something that, if you've done any research on, you would understand was created as a joke, had no use case whatsoever, had no utility, had no team developing on it, had an unlimited supply, meaning that it can truly be inflated away, you know. Um, and you were honest to God taking a chance on this. Your risk to reward ratio, there was way more risk. Looking at it from a technical analysis standpoint, looking at it from a logical, common sense standpoint, way more risk than reward involved in that at that time. Because it was just that piece of information, the actual fundamentals wrapped around Dogecoin. Now, fortunately, and this is where the hope comes into play. Um, a huge public figure picked up this fad. We're talking about Elon. That's what propelled Dogecoin, above a penny. Took it to 4 cents, took it to 9 cents, went back down to 4 cents, took it up to 17 cents, and ultimately had it go all the way up to as high as 74 cents. Now, that was all gambling. You know, again, a few people got lucky, um, and a few more people won some money. There's a difference between, striking it big and just getting a few dollars. You scalping off the top. Because once you get up to, and this is where people don't, I try to explain market cap to people. Once you get up to the numbers where it's no longer fractions of a penny, it's now 10 cent. So if you put in your money when it's 10 cent, it's gonna have to go to 20 cent in order for you to double your money. You know, now versus now you have to understand how much harder it is for that to take place. The more the price increases, and again, understanding that there's a unlimited supply. There is no cap. A lot of people are comparing it to Bitcoin. You can't compare it to Bitcoin. Bitcoin is capped at 21 million. Period. Also on a set time release schedule. That the last Bitcoin won't be mined until 2140, regardless of how much energy, how much effort, what you do to the network. There's nothing you can do to manipulate it. Versus carry our Doge, 14 million is printed every 10 minutes or something like that. I don't know the exact stats anymore. I try not to hold those in my head for too long. Needless to say, you got 5 billion plus new Doge being put into the market every year. So there is no comparison. But for some reason, people, again, who didn't understand the true fundamentals of how Doge operated, how Doge worked, were looking at it from a Bitcoin standpoint. Shoot, man, I got in at 30 cent. The things go to $1. Well, all you're going to do is triple your money. That's a great investment. Let me tell you that. But how much is it going to take in order for it to go to $1? If at, I'll use 50 cent for an example. If at 50 cent, it's at a, 400, well, I think it was at like a $60 billion market cap at 50 cent. That means you're going to need 60 billion more dollars to flow into this thing just for it to hit $1. And that's under the current supply. We're not talking about the continued millions that are being reintroduced, reminted, that potentially could be reintroduced into the market every day. So, you have to understand the amount of energy, the amount of monetary energy that would have to flow in to the market in order for that to actually happen. So, again, that's when you're literally just gambling. You're hoping that something happens, not understanding that the house is in control and the house is going to win. And I feel bad for the people who got in at the top of the Dogecoin pump, because right now it's what, 17, somewhere around that cent. If you pay 70 cent for that thing, you just saw your money almost collapse. And unfortunately too, this is where we go back into the mental state, which is why I use this as an example. Do you have the mental capacity to know that some people put $10,000 into this thing when it was, at, we'll say, 60 cent, and it dropped all the way down to, we'll say, 20 cent. So you just lost 3 times your money. I'm sorry, you just lost, 2/3 of your money. That's a big drop, man. That's a big drop right there. If my math is off, whatever, pull up a calculator. It is what it is. But you get what I'm saying. Do you have the mental capacity to stomach that? Or are you going to sell? Because the thing about it is, on paper, you didn't actually take a loss. It's just that the dollar value of the asset you invested into decreased by a lot. But you don't actually take a loss until you sell. So, are you capable? And I'll use Amazon as another example. Are you capable, and do you believe, or is your conviction as high, or is it high enough to hold an asset that you overbought? You bought it at an extremely high price. The price tanked. Are you prepared mentally to say, you know what, I'm going to ride it out because I'm in this thing for the 5, 10, 20-year plan. I've thought about this and I'm going to hold it. I mean, you guys can really answer that question honestly, truthfully. Hell, how many of you guys have actually experienced it right now? And you're still holding your entire bag with the conviction that it's going to hit that magic dollar. You know, one more time, understanding the amount of monetary energy, because despite the the Federal Reserve printing, um, creating out of thin air a lot of banknotes currently, that they're putting into the economy. There's still a fixed supply of money, and again, Federal Reserve creating aside, you know, money is just being transferred around. So, do you really have the true belief that we'll say $100 billion is going to be transferred into Dogecoin? Do you truly believe that much of monetary energy, that much of wealth, that much of people's assets are going to be transferred into this one particular uh, project? I personally, well, I'm not going to say I don't. My conviction for it is very low because I have seen what the retail investor can do. And by the retail investor, we all know that means you and I, regular everyday people. Um, if enough people get behind it, it does have the potential. Now, the problem is uh, uh, millions of people got behind it during the Elon pump, and it topped out at 74 cents. So you're going to need, you know, 26% more of those people. You're going to need those same people, those same millions of people who got it to 74%, but you're also going to need 26%, or got it to 74 cents, I'm sorry. But you're also going to need 26% more people to get into it and actually, I don't want to say actually add their monetary energy into it in order for it to truly hit that dollar. So just kind of really, giving you guys some questions and things to think about, so you can put things into perspective with every coin, every project. Of course, like I told you guys, I like to pick on Doge. So yes, I did pick on Doge as an example, but with every project, you know, ask yourself those same questions. You should be asking yourself all kinds of questions, and you should be able to find the answer to every single question that you're asking yourself. Because if I look at it as like, if I'm going to give you my money, I need to know every single thing that's going on with your project, because I'm giving you my money. I'm giving you something that I've truly worked, really hard for, and I had to go out and earn. Hell, even my unearned money, it had to be earned at some point. My money went out and worked hard for this money that it made for me. So before I just, give it away, um, I need to know that it's going out and it's going to fulfill its purpose for me, which is go work and make me some more money. Do what those before you did. We'll call them your parents who brought you into existence, and you go out and generate some more kids, which I'll call employees. So uh, really, really consider that. Really, really think about that when you're gambling, because we don't want to be gamblers. Gambling is not good. We don't want to be gamblers. Um, Gamblers go in blindly. Gamblers, you know, they try to play the odds. They try to play chance. You know, in a market that is ran by the smartest people on the planet, a, a collective of the smartest people on the planet who are constantly creating algorithms, who are constantly creating trading bots, who are constantly perfecting, their craft. The odds are never going to be in your favor as a gambler. Especially when you're just throwing money into every little thing that you think is going to go up because you heard somebody say it's going up. or you saw where at one point, it was a penny and now it's almost a dollar, but you don't understand any of the fundamentals behind it. Nothing. You don't understand anything about it. All you saw was it used to be here, now it's here. I think we talk about, emotions. It's going to go here. Well, what is the information that led you to believe that it's going to go there? And if the answer to that question is merely, well, such and such told me, that should never be why you get into something. Even if you thoroughly trust that person, because they could be wrong, they may have overlooked something, and you may should. I've had situations where I've had good friends of mine, you know, um, look into a project or look into an opportunity, and they all they presented me with were, which most people do when they're trying to sell you something, all they presented me with were, all the great things, all the pros involved with it. Well, everyone knows that for every pro there's a con. We need to understand what the cons are. And when I started asking certain questions, related to the potential cons of the project, they couldn't answer those questions, meaning that they didn't do their due diligence. They went in endorphin led, full of adrenaline, full of hope, full of belief in the project without thoroughly vetting it. And as we began to truly, break it down, truly do some research, it turned out to be another Ponzi scheme, and he was very thankful that we were able to uncover that information enough time to where he was able to, get his funds out prior to it collapsing. So that was a beautiful situation. But just an example I want to give you guys in relation to, oh God, um, the fight continues. But in relation to why it's so important to not be a gambler, be well informed, take that. I've spoke for a very long time on this topic, and you guys can understand how important I feel about how strong I feel about this and how important it is to me. You know, take the same approach with the reasoning why you wouldn't give a random person on the street $100 if they asked you for it. Take that same approach with um, somebody presenting you with an opportunity. You ask questions. You know, or if you are going to gamble, understand what the risks are. And they always say, and this is with everything, you know, um, I like what they say, letting people borrow money. Never let people borrow something that you don't that you expect to receive back. That you can't. If you have to have that money back, if letting them borrow something from you is putting you in a bad position, if it's going to create a situation for you to where now you're going to have to struggle, it may incur a serious issue with a position that you're in. You probably shouldn't do it unless it's somebody you absolutely trust, absolutely love. Like my mom. I've been no backwards for my mom. There's nothing I want to do for my mom. We all know, yes. With men, we love our moms. So, I will definitely, miss a payment or, go into some type of debt in ensuring that my mom is okay. Now, granted, I'm going to give a really good speech on the importance of why we have to plan ahead and position ourselves so that we, the chances of us being in a situation where we need to borrow something from somebody are very slim. But yet, it's still going to do it. So, um, not very too far off topic. Like I said, I just really wanted to harp on the importance of, if you're going to be the low end of the pole in regards to the differences between the type of people who get into the markets, try not to be a gambler. At worst case scenario, try to be a speculator at worst, because even with speculators, again, going back to the definition of speculation, you've calculated the risk to a certain degree. You've done some type of due diligence. You have some type of information that's guiding your decision. You get what I'm saying? Again, it just may not be a project, excuse me, that has solidified itself. It still may be in its planning stage. You may be super early to where they haven't actually produced a product, but you still understand. You still know for the most part as much as you can about the project in order to make a truly um, calculated, well-informed decision. So uh, I'm gonna get off that for a second, but now I want to. Yeah, you know what? Hold on a second. Excuse me for a second, guys. I don't want. I'm about to have a drainage situation, and I don't have my box of tissues here, and I don't want to drip on this live. So you guys give me 30 seconds. I'm gonna rush over here and grab me a paper towel real quick so I can blow my nose. I'll be right back. Hey, we're back. I appreciate you guys for giving me that 30-second break. Um, and now I don't have to drip on you guys. If you haven't noticed, yes, I am wearing basketball shorts. The knees are out. Um, I don't wear those short basketball shorts from the knee down. The legs are exposed. I'm very comfortable right now. It is currently 11:24 p.m. Eastern time where I'm located, and when I get done with this, I'm gonna eat and go to bed. So yes, I'm very comfortable right now. But let's get back to what we were talking about. So what I want to do is I want to give you guys a quick, I guess, a view of what volatility looks like in the I like to call it the daddy of the cryptocurrency market, Bitcoin. And when I talk about having the stomach to be able to withstand the volatility of Bitcoin. And here's the thing: of all the different cryptos, actual cryptos, we're not talking about stable coins, but of the cryptos, Bitcoin is the least volatile. So, I always tell people who are looking to get into crypto, get into Bitcoin, understand Bitcoin, understand the fluctuations, get used to the fluctuations because it's very different from the stock market. Stock market, things go down 5%. Oh my God, stock market's crashing. Everything's on fire. The house is on fire. Bitcoin fluctuate 5% in a day. We used to call that Tuesday. So I always tell people, let Bitcoin prepare you for what you're getting yourself into. So let's take a look at the chart. Now, I didn't want to go back too far. So I basically just went back to, what was that? The COVID crash when all the markets kind of went down. Now, at the time, Bitcoin was what? Well, a little over 10,000, almost $11,000. And it crashed all the way to 3,500. That's a huge drop. Now, the one thing that Bitcoin prepared me for was it taught me to see things in the inverse. A lot of people, when they see something, take a dip as big as that did or that was. Oh wait, wrong thing, wrong thing. I want to get the measuring tool. There we go. When they see something drop, you know, 65%. Somewhere in that area, 65, 66%. That's huge. Because of the fact that you're not prepared for something like that. Now, one thing Bitcoin taught me was to not see these as the sky's falling opportunities, but see these as buying opportunities. That's another thing that I haven't discussed yet, but I'm learning from. Hold on, let me switch back over real quick, and I'll come back. Okay, so I got. I'm following. We all follow different people on YouTube because we're always looking to. Hopefully, you guys are always looking to improve your knowledge and learn from people who are doing the things that you want to do but better than you. and taking little tidbits from them. So I follow this trading channel called Traders Reality, and the guy on there, Tito, recommended a book, Trading in the Zone by Mark Douglas. And this book is awesome. This book is awesome. I started reading it, and it teaches you about the psychology, like managing your emotions. This is where I got the idea from to speak to you guys on again, because now is the perfect time because we know Bitcoin has dropped from highs around 64,000 to currently 33,000. And yesterday, well, actually this morning, it took an even a dip, because it was looking at around, what was it, pushing around 39,000. It dipped all the way to 28 earlier this morning. So um, it helps you from a reading standpoint because a lot of times we learn, especially me, I'm an old school guy, I learn through I retain things that I read. So um, it taught me, going back to the volatility of Bitcoin, it taught me how to see buying opportunities. Now, like I told you guys, I'm learning how to become a trader. So I'm learning charts, I'm learning things like that. As you can see, I have, some indicators up here. I subscribe to Market Cipher and things like that. But um, when things are moving up, when price is rising, this is when market makers are preparing their shorts. This is when they're looking to take profit. This is when you guys should start taking profit. We have that, we tend to get greedy. And when things are going up, we tend to forget that what they always say, what goes up must come down. Well, in a bull market, we tend to think that everything's going to go up and just keep going up. We forget that corrections are needed, corrections are healthy, everything corrects. So, one thing that it taught me, and I'm continuing to learn, is how to begin to take profits as things are going back up and saving those profits, not spending those profits, saving those profits in a stable coin, preparing for when things go back down. You see what I'm saying? Because again, as an investor, you're looking at it from a long-term perspective, and you're basically just building your stash, or your bags, whatever the hell they call it nowadays. You're just building those. So you want to capitalize on as much profit taking as you can without selling your entire portfolio, because of course you don't want to do that. You just want to make sure you record your entry points, record your buys, and set targets, as the price continues to go up to where you start taking profit. Roll those profits into a stable coin. Again, not financial advice, just telling you guys what I do. Roll those profits into a stable coin, wait for dips, buy those dips, because you understand that what goes up must come down, or what goes down must come back up, unless the project is totally collapsing. We know Bitcoin is not, at this point, we know Bitcoin is not going to collapse. So every major dip, again, Bitcoin has taught me, as well as, the people that I follow, to view those as buying opportunities and to have a stash sitting on the side waiting on those buying opportunities. So that was one. As we scroll, I'm going to zoom out because, as we always say, zoom out. Now look at that. You guys, when you look at this chart, this is volatility. This is great volatility, but it's still volatility. People tend to forget that things that are volatile, we think of volatility as it's going to crash. It has the ability to crash, which is great because that helps you with the risk management. But most people, those gamblers, all they see is it's going up, and again, zooming out, well, hell, it looks like it's going up in a straight line. But as we zoom in, you'll see that that line isn't as straight as you think it is. There's a lot of red in there. There are a lot of buying opportunities. There are a lot of opportunities, to get into it as it's on its way up. And that's where it's important to understand that what I was talking to you guys about in regards to when it's going up, take profits, hold those profits, let it correct, buy more, let it go up more, take profit, let it correct, buy more. You see what I'm saying? Because gradually, this is what people talk about with compounding. Gradually, you're going to build an enormous bag. You're going to have something that's unbelievable. And man, this right here, this correction, again, coming off that high from $64,000 all the way down to $33,000, that's a 50+% discount. You get what I'm saying? Now, again, this is learned behavior. We all learn through, actual experiences. So hopefully those of you all who are in, who are in this market, especially as investors, are learning the importance of why you should take profits back. Hell, this is December. Look at that. Back in December, $17,000, all the way up to $64,000 in April. What's that? 5 months? Had you been taking profits along the way, or was smart enough to identify the Wyckoff distribution pattern that had taken place there. But if you were taking profits along the way right now, but you're buying this massive dip, you're not spending any of your money. You're spending the money that this made for you on the way up. It's all there. Of course, we're going to add more money to it, because I told my buddy that, if this thing continues to dip down, I'm going to sell my car and buy more from my car. But thankfully, we were able to pay cash for the cars. But shoot, man, let this thing continue to drop. I would throw the kitchen sink at this damn thing if I had to. Again, because I have a very strong conviction that, 5, 10, 20 years from now, this 32, 33, people are going to be wishing Bitcoin was $33,000 10 years from now. I'm willing to bet anything on that. People are going to be praying it was $33,000 because it'll be well over $1 million. My personal thought, not financial advice. My personal thought, not a price prediction. Just saying, I feel that 10 years from now, again, scarcity, supply, demand, stock to flow, those things are going to take into account. And yeah. So anyway, that's I don't want to hold you guys too late. It's already 11:35. We've been on here for what? Oh man, we've been on here for over an hour. All right, I appreciate you guys for sticking with me this long. I know I can be very long-winded, so I want to leave you guys with two things, and then we'll go ahead and wrap it up. But it says that if the information the market generates doesn't have the potential to cause you emotional pain, there's nothing to avoid. It is just information telling you what the possibilities are. This is called an objective perspective, one that is not skewed or distorted by what you are afraid is going to happen or not happen. So you're basically paying attention to what's in front of you right now. And it does not move you left or right, front or back. You see what's right in front of you, and you're able to make a well-informed decision based on that information. Now, one more thing I will leave you guys with is that when it comes to being in the market, your fears will act against you in such a way that you would, excuse me, I'll start over. When it comes to being in the market, your fears will act against you in such a way that you will cause the very thing you're afraid of to actually happen. If you're afraid of being wrong, your fear will act upon your perception of the market information in a way that will cause you to do something that ends up making you wrong. When you are fearful, no other possibilities exist. So, if you haven't taken away anything from this video, please take away from that. What you're afraid of mentally in the world of the market, in the world of investing, is eventually going to play out, because subconsciously that fear is going to cause you to do something to create it. It's going to make you do something to cause it to play out. So that's it, guys. Have a great evening. I'm gonna leave you how I always leave you, in the words of Russell Simmons. Thank you for coming out. God bless you. Good night.